Hi there, this is Robert Schein with Blanke Schein Wealth Management, Managing Director and Partner. Today we had another volatile day. I'm going to walk you through some things that I think you need to pay attention to, so I appreciate your time and let's get right to it. So as we went through today, the Senate did not pass the stimulus bill. In fact, there's some differences within Congress, which is not a shock. In fact, that happened in last 2008, 2009. And what the Federal Reserve did is, and they fully anticipated that Congress wouldn't work together, or there would be sort of an impasse. So each side could, one way or another, get what's important to them versus what's important to the American people. I would honestly, I don't know why there's an issue right now, but they need to work together. They need to work fast. But the Federal Reserve fully anticipated that somehow, some way, may not pass. So the Congress wouldn't agree. The fiscal stimulus package wouldn't go through. So what they did, and we saw this last night as the Federal Reserve on monetary policy, they injected again, billions and billions of dollars of liquidity into the system, and that's extremely important. So they sort of trumped the capital injection that would be coming from by way of tax cuts, by way of checks in the mail, by way of small business incentives to sort of hold on your employees and do all you can in the next month and a half, because we're going to get through this. So the number one thing is that Federal Reserve is ahead of the game versus being behind the game from the Great Recession, as we saw back as early as 10 years ago, 2009. So I think they played the hand very well. They're going to continue to do so. We're going to see several rounds of monetary policy, and I would not bet against the Fed because they're acting hard, fast, quick, swift, and proportions that we've never seen before. So they're extremely determined to ensure that we've got, even though we're hitting an economic sort of cliff at the moment, as we have put the United States economy in a coma, we're going to come out of this. We're actually going to come out of this quicker than we think. In fact, that's also the research that I'm going to show you right now. So the first point I talked about is Trump, liquidity trumps capital, no pun intended. It has nothing to do with the president there. It's talking about fiscal and monetary policy and sort of the Federal Reserve coming to the rescue and injecting liquidity in the bond market. And that's what needed to happen. So they've been doing that, and they're going to continue to do that. And they've been verbally committed to doing that. So that's extremely, extremely a positive sign. And they're doing it faster than normal. Number two is visibility. So where is the United States on the coronavirus 19 curve? So this is a study that was actually confirmed, right? New information confirming infections. And it shows this rate, this arc, or this peak that everyone's talking about is the wave. And we want to get the wave sort of under the current trajectory of where it is. I think we're doing a great job, especially in states like Washington, California, and New York. I know that my family and I this weekend, we stayed in, and I know that many other families are doing their fair share to do that. But if you look at this chart right here, I'm going to show you that the United States is right here, and we're trying to not hopefully go all the way up to where Italy is. Italy is very important to understand. If you go to the Worldometer or John Hopkins website, Italy has a high rate of fatalities, but they're also the oldest country in the world, demographically speaking, as well as they have the highest number of smokers. So kids don't smoke. This is not helping out right now in terms of what you see as a trajectory. But as we go through here, these are month by month. So we're in the first month. There's month 2, month 3. And, we're somewhere between here and here. So I'm not saying, and again, I'm not a doctor by any stretch of the imagination, but we can look to those that are, and they show that China is all the way over here on the other side of it. The good news is there is another side. That's why I show you the importance of this curve and relative to. Again, the media headlines acts like the United States is a third world country. I have many friends and clients in the medical profession in the United States of America. I think that we're a little bit better than that. In fact, I know we're a lot better than that. But I just want to make sure that we're reporting properly, that if you were to be sick anywhere in the world, I'd want to be sick in the United States. That's for sure. And so Michael Levitt, he's a Nobel laureate from Stanford. He's a biophysicist. He also began analyzing the COVID-19 cases worldwide in January, and he correctly calculated that basically, we would get through the worst of the outbreak sooner than all the experts predicted. In fact, he correctly calculated that it would happen in China on this particular trajectory. And this is a real news report you can pull up, look him up, and this is real news. He basically said that while many epidemiologists are warning that months, even years, and massive social disruption and millions of deaths, Levette says the data simply doesn't support that dire scenario. In fact, especially in areas things are better. So question is, a lot of clients ask, hey, well, what about China? China is not giving us the most important information, or they might not give us the information that we believe to be the truth out there. Well, Cramer actually hit this head on last week, and he actually had the CEO, Kevin Johnson, on his, I don't know if you watch Cramer at the end of the day, but he basically had the CEO of Starbucks on. And the CEO of Starbucks, Kevin Johnson, said, and here's the full story on CNBC, you can go there, he's sending his workers back to work in China. So listen, China can say what they want, whether the cases are reported or slowing down, it's getting better. You also have Korea, Taiwan, and Singapore to back it up if you don't believe China. But a United States CEO would never send his employees back in the middle of a situation where it's not getting any better. So I like to look at that as a positive sign right there as well. And then the third point is, don't forget, we have institutional rebalancing. So what that means is for any investor that has a 60-40 initial allocation portfolio, so stocks to bonds, keep in mind that the world has that too. So meaning institutions. So it's estimated right now, this is real time from this afternoon's information, it's estimated that the balance of a 60-40 portfolio in the mutual funds world, institutionally speaking, that 1.5 trillion universe in the United States and 4.5 trillion globally, meaning the amount of money invested in a 60-40 portfolio, investing in stocks and bonds, will have to be rebalanced by month end. What does that mean? That means that your stocks have gone down, okay, in those equity valuations, especially institutionally speaking. So that's a 1.5 trillion in US and 4.5 trillion globally. Add that together and they have to go back in to bring them back into weighting, a positive weighting of what their investment policy statement says. And we do this positively and proactively for our clients too, is constantly proactively rebalance our clients' portfolios. So that means that they're going into the open market between now and month end to bring them back into balance. That's their policy. They have to do it. They're essentially up to 300 billion of equities would be fully rebalanced back to a 60-40 allocation. Now this is the reverse. If it was stocks going up, this is like the last quarter of last year when stocks goes up, you sell and you bring yourself back into balance, and it positions your portfolio properly so that you're prepared for markets like this. When the market does downturn, then you can rebalance the other way. In fact, rebalancing institutions do it. Endowments do it. Retail America should do it. We do it for our clients at Blanke, Schein Wealth Management. So I just want to let you know that there's three major signs here that I think are important to pay attention to. And thanks for your time.